Hi, everyone. We're going to give it a minute or two because we can see everyone just being let in. But good evening, good evening.
What time is it for you?
So for us, it's 6:02 p.m.
Okay.
in Nigeria. So most people are either done with work or heading home, commuting, depends. Are you guys fully open yet? Or are you guys still on lockdown? What's
We're
going on?
we're optional. You know,
Ooh, okay.
I'm here at Benzinga HQ, the headquarters, and Neal is hanging out about a mile away.
I'm at Neal HQ.
Yeah, Neal HQ.
So how often? So do you guys go in? How often are you going in now? Or are you still are you working from home still, or are you going in half and half?
I'm working from home and I go in occasionally, just to drop off candy for Luke.
Mm-hmm. Which is well received. Yes.
Oh, but look, are you enjoying going back to the office? That's interesting.
Absolutely. You know, move around a little bit, change it up, take fewer naps now. So
Yeah, I mean, we're still working. Well, I mean, we're fully remote now, but the office is
okay.
still open. So we have some people going in when. So I mean, it's a toss each day to know who's going to be in and who's not. I haven't been in ages, but I think I'm going to go in next week. But it's nice. I think we've all gotten used to this.
Yep.
But I'm hoping for an open summer at the least. Hopefully, everyone gets to do something fun, do some traveling.
Yeah,
Fingers
Absolutely.
we shall see.
Okay. Okay, so I'm gonna give it one more minute. So it'll be 6:05 in Nigeria, and hopefully that gives us enough time for everyone to join. Hi guys. Let's see. Hi everyone. Yay. So still 6:04. This now feels like the longest minutes ever. But there we go. Yay. It's 6:05 p.m. in Lagos. And what time is it where you guys are?
1:05 p.m.
Yep.
1:05? Okay, and where are you guys right now?
We are in Detroit, Michigan, which is
Okay.
the Eastern time. So we have the benefit of being on the same time zone as the New York Stock Exchange.
Nice. Yay. Okay. Hi, everyone. Welcome to the second Bamboo Bootcamp session. If you were at the one this morning, hope you had a fantastic time. This evening, we have two of my favorite people to speak to, and two people who have actually helped me make money. So you should be very, very excited speaking
There we
to
go.
them. Yes. And you have Luke and Neal from Benzinga. And if you assume everyone here has the Bamboo app, if you have the Bamboo app and when you look on every stock page, there's a thing that tells you why a stock is moving, why it's doing something crazy. And these are the two guys who are responsible for that and for a bunch of other stuff. So hi guys, thank you so much for doing this. We're very, very, very happy to have you. Everyone, it's going to last, we're going to be on this for about an hour. Hopefully we get through everything. Last time I did this with Luke and Neal, we got very excited and took way too long. But
And you
hopefully we
had
get
some
through
fun
everything.
games, okay?
Yeah, we
Yes.
like the games a lot.
Yeah.
Yes, well, we're going to do those games again. And just letting everyone know, the Bamboo Bootcamp lasts all week. And if you trade during this week, any stock you want, if you trade during this week, 3 lucky people are going to stand a chance to win cash prizes. So the winner is going to win $2,000. And the second prize is going to be $1,000. And the third prize is going to be $500. So hopefully someone from this session wins because Luke and Neal have amazing, amazing ideas. And hopefully one of you win because I can't win. And so you have to win on my behalf. So
Well,
yay.
it's nice of you to join us, even though you can't win.
Yeah, unfortunately.
Get
So
to
let's
host
get
it
it.
for us.
Yeah, so
I'm
let's
just
get.
dropping picks in the chat right now. I'm just giving everyone trade ideas. Guys, watch the chat. Trade ideas will keep coming through this session.
Oh, yay. Okay, so let's go, guys. So we're studying. So what do you guys think are the fundamental differences between good investors and bad investors?
I'll hop into this one first. I think one of the key differences is being able to manage a position when you're wrong about it. You know, when you're right and the stock is moving with you, it's very easy. You know, you can let it ride. You feel good. You have confidence. You want to keep going, keep investing. Where I've had trouble in the past, and I've seen so many people run into trouble, is when the stocks move against them, right? And then they make a pick or they take a position that all of a sudden it's a loser. And rather than saying, hey, I'm going to cut my losses, I'm going to take the cash, run to the sidelines, you know, they just leave the money in the stock and it just trickles lower and lower and lower and lower and lower. You know, until what could have been avoided as or stopped out as a 20% loss becomes a 60, 70% loss. And your initial capital is lower, and you've got to try to figure out how to get back to where you were. So I think like the most fundamental difference between people who are great and poor investors is the good investors know when to get out when it's not working for them, and they can keep their emotions in line.
Oh, so
Go ahead.
go
I'm
on.
sorry.
Yeah. No, I was just gonna bring it on that. No, why do I, if it's going down, why don't I buy the dip, as everyone's saying?
So my response to that would be whenever a stock moves against me, there's two things that I think about. I remind myself, why did I buy this stock in the first place? For what was the thesis? What was the reason that I got into this stock? Does that thesis still hold? Yes or no? Right? And a lot of times when we pick stocks and they don't work, our thesis was proven wrong. You know, I talked to a lot of people who will buy a stock into an upcoming earnings report, and they're, you know, buying it because they think they're going to have this great, you know, earnings results, etc. The company doesn't. The stock goes down, and they hold on to the stock anyway. And so I think you always have to ask yourself, well, why am I in this stock? If you don't have a reason to own it, you know, get out of it. Load up on something that you do have a reason to own.
Mm-hmm. So what I would add to that is, like, buying the dip is a really short way of saying a few different things. If you're in a stock that's a great company that you have conviction in, like Luke just said, like say it's Amazon. Amazon dips 10%, the entire stock market is down to a similar magnitude. That doesn't mean jump ship. It doesn't mean your original thesis is bad. In those cases, you should be, as an investor, understanding the concept of dollar cost averaging and adding into your position on regular intervals. So what I do, this is something that can, I would imagine, be done on Bamboo, is I pick my big stocks that I know are going to be around for 10, 20 years, or sector ETFs, and I'm adding to them every paycheck, no matter what, up, down, no matter what. But something that goes into that I hinted at is the sector aspect. Know which sectors have strength every quarter of the year or every year. So we know that tech does not have strength right now. The tech sector simply doesn't have strength. We rotated into value. We rotated into metals and mining, so non-precious metals. We rotated into energy, which is principally like oil, and some coal in there as well. So those sectors having strength tell me invest in companies in this space for the intermediate term. It doesn't mean I'm going to hold on to an oil company for the next 5 years. That's crazy. But I will invest for the intermediate term. So knowing sector rotation is essential for understanding why certain stocks are going up and down.
Oh, okay, that's interesting. So is that like a set quarterly sort of thing? Like, so at the start of the year, most people like, or is it transient, should we say?
So it is both. So there's seasonality that is just is consistent with some sectors. But the idea is that as an investor, you should always be looking at the top sector ETFs that are provided by Spider, and looking at the ones that are starting to rise up against SPY. So look for the sectors
And
that
what
have
time
strength
horizon are
against
you
SPY.
looking at? Like it's rising over the past month, the past week, the past day?
Month is
Month?
where
Okay.
you want to be. Yeah. I check the sectors every day, and that's how I pick my swing or day trades. Whichever sector is the
Okay.
strongest is where I'm picking my stocks for the day.
Oh, okay. That's interesting. And then, so how do you then manage your risk? How do you, as a good investor, how do you manage your risk?
So something to add to what Luke said. One is if your thesis is broken, such as hydrogen fuel cells. I'm really getting into hydrogen fuel cells because I think it's a viable option for cleaner transportation. And then it's starting to come to fruition that we've got great batteries that can store solar energy significantly more efficiently than hydrogen, for example. Then my thesis is broken, and it's time to drop those shares and start rotating into something that I have more conviction in. Additionally, every stock that you're in, you should have an uncle point, or like a price level where you say, okay, I'm out. And that's based on technical analysis. It doesn't mean a certain percentage drop in a day because flash crashes happen. Like I said with Amazon, that back in the mid-March, March 15th, everybody lost, 10, 20% on every single thing they had. But it turned out to be the best buying opportunity that we've had in at least 5 years. So you need to have, based on technical analysis, anomalies notwithstanding, like pandemics and stuff like that. You need to have a key support level that you're not willing to go beneath, and once you do, you're out.
Okay.
Because
But then
otherwise, there are opportunities everywhere. You might as well take the loss and just get something that's on the way up.
so I'm curious, would you say that on the other side as well? Like, at which point as an investor do you think, don't get greedy, take your gains and leave, Is there a line between, tenacity and greed? Is there,
Luke, what is it?
All right.
Tell me about your greed.
If you're winning, let it ride. That's my opinion. If the chart is moving in your direction, the stock has energy, it's going, I let it ride. And the way that I'll manage that, right, is you don't want to take something that's a 50% winner, ride it all the way back down to where it was, and now you've got a 0% winner.
Don't chase.
But you don't want your 5% pop to move you out of the stock. Hey, I made 5% in a day. I'm bailing. And so the way that I manage it is, the trend is your friend. That's a favorite line that we like to say around here. If the stock is winning, it's hot, it has energy, it has momentum, I keep in the position, and then I'll start pulling part of it out on a pullback. If let's say I bought the stock at 5, it's at 10 now, we slide back to 9. All right, it looks like some of the energy, some of the momentum is falling out of the stock, then I'll start unloading the position. The other thing I'll keep in mind too is that you don't have to sell 100% of a position at one time. You own at least 2 shares, you can sell half of it. You're up a decent bit, you want to book some profits, sell half of it and let that other half keep going. You start to get some of that pullback, take some money off the table, sell half the position, see how it settles out. If you have another couple of days of weakness, okay, the trend's broken, bail, sit on the sidelines, find your next play. That I'm always a fan of it. If it's winning, if it's working, people are seeing the story, they're buying the thing up, let it keep riding.
And something I would add to that is just keep raising your stop loss. Do a trailing stop loss if you can do it, or just keep raising your stop loss. And if keep it between 0% and 7% stop loss. Anytime you get a significant gain, throw it in there. You'll get a notification that you've been stopped out of your position. Buy the dip if it still matches your conviction. This is safe. That's what saves you from flash crashes. That's when you're in Amazon and then it totally tanks on March 15th or whatever the exact date was that it went down. You don't have to take that whole loss, but you can find the bottom and start averaging in. So that's one way. The other way that I think is really important, that I think most investors are not aware of, is market cycles. These are the cycles where institutions are buying and then selling their shares of any stock. And you can see it on every chart for any asset that exists, particularly like a recent example is with Bitcoin. You can see it perfectly exemplified in the chart on Bitcoin. So those 4 phases, it's accumulation, markup, distribution, and then markdown or correction. So everything is going to make a U shape, and it might like take a U shape that goes higher than the preceding U shape, but knowing those market cycles is really important to know where you are in the rising and falling of a stock.
Oh, okay. So that's really interesting. And you mentioned earlier that now wasn't great for tech. I think we're all feeling that it's been a roller coaster year for investors with tech heavy portfolios. So for those of us looking to diversify our portfolios out of tech, what sectors would you say we should be watching?
Metal, oil, and that's really it. Financials were like number one. If we would have done this session like a month ago, or perhaps like any other time in 2021, I would have said financials. So that's your banks. They have been the high flyer. But if you want to, here's an easy trick. Look at XME and XLE. Those are spider sector ETFs. Look at the stocks that are held within those ETFs. Just look them up. However you do it, Google, whatever, and then pick your winners from there. Those have been these stocks that institutions who fled from tech have gone into, and they've been killing it over the past 3 months. More than that, I still feel like we're in the first quarter, but like they've been killing it since like January.
Yes.
Oh,
yes.
so that's XME and XLE, right?
Correct. So that's XME metals, XLE energy.
Okay.
And I still like the bank stocks. I put on a ton of bank positions at the beginning of the year. I still like them for a couple reasons. One is, globally interest rates are at historic lows. How do banks make money? They make money by lending money. When interest rates increase, the spread that they get on lending increases. And I sort of think about my bank positions now as a little bit of a hedge on the market. If global central banks come out and start to increase interest rates, the market's going to get hit on that, and banks are going to benefit. So I still hold the bank positions for those reasons. And I am so right with Neal on the metals play. I actually just got into metals. I did it with just GLD, super simple. It's the gold ETF. It tracks the price of gold. I mean, we're seeing globally inflation is starting to really get moving. I don't think it shows any signs of stopping. There's been so much money printing across the world to fight the pandemic. And historically, I mean, there's a ton of academic research that shows that the price of gold, precious metals in general, appreciate when we're in periods of high inflation.
Okay, so as speaking of inflation, we live in Nigeria where inflation is insane, but it seems inflation is trying to rise across the world too. So for investors looking to inflation-proof their portfolio, any advice for us? I mean, you just had metals, which is good. So we know GLD, that's the gold ETF. Any other advice for investors looking to inflation-proof their portfolio?
I mean, like very simple. I don't think you have to overthink it. I don't think you need to understand market, like the economic dynamics of how inflation works. I don't think everyone here needs to read those chapters in their economics book. Really is just know which sectors have strong trends, trade with the trends. So look at the spider ETFs for your sectors. There's like 10 primary ones, but then there are some other ones that get more specific. So you've got sort of on a top level, you have sectors, and then subsegments of those sectors are going to be individual industries. So like just now, luxury goods and communication devices are starting to get into strong upward trends. So now's a great time to get into those. But to inflation-proof your portfolio, always stay in the sectors that are in the strongest trend. Allocate, if there's any amount of your portfolio value that you're allocating to individual stocks that you don't plan on holding for the next 3+ years, that remaining segment is the one that you want to keep rotating around the strong trending stocks. And then inflation, you don't worry about it because you're making 20% on your investment every quarter.
Neal, do you like crypto as an inflation hedge? Yes or no?
Don't put me in that. So I, theoretically, here, Luke.
Theoretically, I do too.
Yeah. Like theoretically,
But
yeah.
you're taking a lot of volatility. That's where my gold is, like the anti-crypto. I'm not saying that I'm bearish on crypto by any means.
You made the right call
yeah.
on gold for sure. Like gold has been like a sleeper. Everyone's been wondering what the heck is going on with gold. Like all last summer, like it's going down.
Yep.
Bitcoin is going up, but then gold has been creeping up, and Bitcoin has formed a classic rounding top, or you can say like a head and shoulders reversal pattern. And I think it still has a little ways down before it gets any stronger.
Yep, absolutely. And the only other point that I'll add is that having money invested in the market is a hedge against inflation, right? You're exposed to inflation if you don't hold anything but cash, right? Because that cash that you hold is just gonna continue to depreciate. If the base currency goes down, then theoretically stock prices are going to go up to accommodate for that. And I right now was, again, I mentioned where I'm at with inflation. I think that holding large amounts of cash and whatever base currency it is just setting you up to get hit by that inflation.
Yeah, that's very true. So guys, do we like ETFs? Do we like single stocks? I feel like there's a discrepancy on this between me and in
I like everything. There's like whatever's going up, I like. That's all there is to it. And for me, ETFs are a tool. So ETFs group together stocks, so they tell me which sectors have strength against the rest of the market. And that strength is what I want behind me when I'm entering in, because I know that's what the institutions are going to help me. That's the wind that's pushing my boat forward. I don't want to go and I don't want to try to spit into the wind, you know. Then also it's a lot easier if you can't just pick a stock that you don't want to do the fundamental analysis on to learn their balance sheet and their history and their company vision and stuff. Just buy the ETF and call it a day. Yes, you won't get direct exposure to the stocks like volatility, but you'll get the general direction that it's going in.
But then, what do you say to people who think they're boring? Oh, sorry, go on, Luke.
No. I want to hear Neal's boring answer.
To people that think they're boring, boring makes money. And it keeps and it protects money. Exciting, it makes money sometimes, most of the time doesn't, and is risky, is what I'll say to that.
Fair enough.
Luke is the exact counterpoint.
So 75% of my holdings, my portfolio, 75% of it is an ETF basket, right? I hold a handful of ETFs, which give me pretty broad global exposure, right? It's not like I'm just holding US large cap ETFs. I mean, I buy a basket that gives me pretty broad global equity market exposure. And then I take that last 25%, and that's where the fun comes in. And that's where I do the individual stock picking, I do the swing trading, etc. And that's where I'm looking to add alpha on top of, hey, here's how the market's moving in general.
Okay, that's good. And so before we get to games and general Q&A, what tools are the best for investors looking to invest? So we have a bunch of people here who are new to investing. We also have some more experienced traders. So if you can give us a broad range of tools that you think investors can use to get better at investing and getting better at investing, like both of you.
Well, Benzinga Pro is a great one. Benzinga Pro, I mean, obviously it's our product, so we're going to tell everyone that they need to use it. But Luke and I have been working on Benzinga Pro for the past, like I've been working on it for 4 years. Luke has been working on it for longer. So everything that we've learned and everything that our quickly growing customer base tells us gets built directly into it. So there are people that are trading actively and then also use it as a basic just due diligence research tool, and it's fantastic. So what Benzinga Pro is providing you with is a live news feed. And then you're also getting a charting tool. You're also getting a scanner to find out what's moving. You're getting signals to things like unusual options activity. So if there's a big banker that's doing some inside trading on some illegal information they have, that shows up on the options chain, and you can actually use that to make a profit. That shows up in Benzinga Pro. There's a great number of things in Benzinga Pro, but the number one tool, and I'm stealing this from Nick Shaheen. The number one tool, we all have it already, and it's your
Charts.
eyeballs. No,
That was close.
that was good. That was close. It's your eyeballs. We all have eyes. So you should be able to look at a chart. I mean, it's a bit pedantic. It's so. Oh, geez, you really put me into a situation with that one. Yeah, so I mean, you should be able to look at a chart and without any technical analysis background at all, be able to say this is going up or this is going down right now, or has been going up or going down.
And again, the trend is your friend.
Exactly. Trade.
There's a lot more that goes into it, but if you need one basic thing to start with, I see a couple of comments in the chat are like, hey, where do I get started? Trend is your friend.
There are only 3 directions any asset can go in. It can either go down, sideways, or up,
or loop-de-loop.
Or it can go backwards in time and do the loop-de-loop, but that's extremely rare, and I don't advise investing in that. But yeah, so trade with the trend. Stocks that are going up tend to continue going up. There's no reason for them to stop.
Okay.
The other one that I'll throw out for tools too, you're looking for. I'll take sort of the different approach from Neal, and I'll talk about longer term investing. Right, we're talking about a multiple year time horizon. We want to pick good companies, good stocks to be in and make some money off of. Sort of like trend is your friend. Growth typically begets growth. Right. If you have the option to invest in a company that is growing revenue year over year basis consistently versus a company that's losing revenue on a year over year basis consistently, which one do you want? You want to pick the one that's increasing revenue. So don't doubt stock screeners. There are tools out there that let you filter down stocks to get a universe of, hey, here's a group of stocks that I can start looking into that meet a certain criteria. I think one of the easiest things to filter by is look at 3 or 5 year revenue growth. Is it increasing or is it decreasing? Companies that are increasing sales typically in a better position than those that are decreasing.
Okay, that's good. Guys, so we're gonna go into like the games portion of this.
Yes.
So if you have any questions, please put them in the Q&A box, because that's where I'm going to be taking questions from after. So please don't put them in the chat because they'll be easy to get lost. But I already see Luke and Neal already answering some questions in the chat. So thank you so much, guys. Okay, so our first game is one of our favorite games, which is toss or keep. So essentially, if you already have this stock in your portfolio, are you keeping it or are you going to sell it now? It's a good time to sell. So first, you both have to just say toss or keep, and then you can give explanations after. Yeah. Okay. So let's start with Tesla. Tesla polarizing.
Keep
for me as well.
Keep. Would you buy it now, or would you only buy it if you already had it?
I think that Tesla needs to start showing some more strength, consistent higher highs and higher lows, before I would enter if I'm not already in it. And then we'll see that across EVs, all the peripherals, batteries, whatever. Once we start seeing some more money and enthusiasm returning to that sector, it's a very obvious time to enter. But over the long term, Tesla's a real company. They're making real cars. I see them on the street all the time. And we don't live in Beverly Hills. We live in Detroit, so it's a good company. They have a great vision and they still operate like a startup. So there's still a lot of growth there.
Okay.
Yep. I'm same thing as you, Neal. I think the chart doesn't look great. I don't think it looks like it's not set up for a swing trade or anything like that. But long term, love it.
Mm-hmm.
Discovery.
Like financial services.
Yeah, I think that's their ticker symbol. Let me just make sure. Yes.
I thought it was like the media.
Sorry, give me one. Yeah, exactly. Yeah, it is the media company. So
this is Discovery Channel.
Disca. Yeah, Disca. Yeah, there we go. The channel. My
Series
bad.
A with the A at the end. I think throw that away. Like, why? What's your future vision for the Discovery Channel? Like what the only catalyst that Discovery has coming up is that they may be added to some streaming services that may have some growth, right? Like I think AT&T weren't they merged with Warner, which means that they're going to get into like the HBO Max sort of world of streaming. Whatever, that's a survival catalyst. That's not a growth catalyst in my mind. So for me, they're not doing anything interesting. They're not comparable to something like Disney, which is totally multi-vertical IPs. Discovery is just purely video streaming or
Aren't
video
they the only?
stuff.
Well, I think aren't they the only type of company that like? Is there any other company that does all this Animal Planet, Discovery type, science style?
See, that's
They
why
own
I think it's interesting. I'm a
yeah,
keep. I,
they
I
own
I think it's a
TLC.
takeover target. I think it could get acquired. I mean, they have such a catalog. They've got great brands.
Here's
I think
my
it's
thing.
interesting for that reason.
That might be true, Luke, but I'm not going to sit around and wait for it. I'd rather have something that's going to make me money in the meantime. So I'll be like going up on like I'll have like Netflix or something. I'll be waving at you on my way up.
Okay.
So we know who doesn't watch Animal Planet.
Yeah, exactly. The hell, Neal?
YouTube has all of the videos of animals. Like you don't need Discovery, you know? Aren't IPs.
Airbnb.
Keep. Oh, come on. I was gonna
I said it first.
I'm a
you
strong long keep on Airbnb.
It's
Would you
the
go
best.
in now though?
Yes, absolutely. Now, like the chart, everything. Now, Airbnb looks like a snack right now. Airbnb, I would start scaling in right now. In fact, I am. It's absolutely the future of travel. Like, why would I stay in a hotel that's in a stuck location, gives me very limited choices, and probably hasn't been renovated or anything cool done with it for the past couple of years? It's not interesting. I'd much rather get into the location that I'm trying to go to, someone's house that's on top of a mountain or something like that. You don't get that with the hotel brands. Airbnb is cheaper, gives you a lot more flexibility. It's just it's a real disruptor, and right now it's on a fire sale. So
and here are the other couple things too. Is the market? We haven't seen how the stock performs in normal times, right? This was an IPO that happened during COVID. It was a depressed IPO. I'm surprised the company did it then. I want to see how this thing performs when we're like in a post-COVID world, travel's at normal. And we had Hilton come out. They said last weekend 93% of all of their rooms were booked. I mean,
yeah,
we're getting there. And what I think is even more interesting, Airbnb last week, they announced that they're getting out of just travel and vacation homes. They're going to get into the typical rental market. Right. So if you're a landlord, you own properties, you can start listing them on Airbnb for a 6-12 month lease. Huge market.
Anytime, and that goes back to what I was saying about God, I think Tesla. Anytime you see a really known brand still operating like a startup, meaning they're still creating new revenue streams that are disruptive in nature, you want to stay with that. That's like Amazon. So yeah, Airbnb is a great stock.
Okay, that's interesting. Estee Lauder.
Keep.
Okay, well, I don't know this one.
They own all the
You
brands.
use their products, Luke.
It's beauty stuff, right? I was gonna make that joke about Neal. Okay.
It's consumer non-durable. Hey, I don't wear makeup.
You know, you probably do, but you probably use something they make because they own everything. But I was just curious as to whether that you think there's much growth in these kind of like, you know, bigger conglomerates kind of.
I when I see Estee Lauder, I think luxury brand. Luxury brands are starting to emerge as one of the strongest industries right now. They're one of the fastest growing over the past couple of weeks. Look at luxury brands. I mean, you can look at like Fossil is another one. There's a whole list, you name it, of publicly traded luxury companies. Estee Lauder looks strong. I'm a keep on that. And plus, I mean,
I'm toss. I'm going toss. I'm looking at it now. The pre-COVID price in the stock, $220. Right now, $302. The stock is up 40% from before COVID. Revenue growth hasn't been that strong. I said their sales haven't jumped 50% since before COVID. I don't know the company well enough to be able to say, hey, they're entering this new market or have some new product line that's going to continue to fuel sales growth. But I don't love it. I mean, it's already trading at 8 times sales. It's not like that's crazily expensive, but it's certainly not cheap, and especially not for a super high growth company.
counter take on that is that you can draw a straight line
The
for
beautiful
every
chart.
swing low. The beautiful chart.
It's a beautiful chart.
Every single time the stock has gone down, it's hit a single sloping line of support going up through time. All right, so we're talking about tossing or keeping something. This one is one that shows no signs other than it's going to continue to grow over time at a steady pace. The linear regression on it is a 45-degree angle.
So here's the other way that we could come back at it is, this thing really outperformed in COVID times. Was that because it's a flight to safety stock? Was this a flight to safety? Hey, I don't know if people are going to book flights. I don't know if people are going to go out to eat, but I know that they're going to buy a shampoo. Money flew in there because there's more certainty. As the world gets back to normal, does this one start to get boring and start underperforming after, a crazy year of outperformance?
Yeah, I'm keeping it.
So we have would anyone go in now? Luke definitely wouldn't. Neal,
I'm out. Yeah, I'm out.
Only me. Estee Lauder is about to here's some more technical analysis. Use your 10-week moving average on your chart and use your 20-day moving average. It's about to bounce off both of those at the same time. So now's a great time to enter. Your price target from here would be about 317. And right now we're trading at like 301. So now's a great time to enter.
Yeah, Luke is not convinced.
No.
So next one, Ally Financials. They're actually in Detroit, or they're headquartered in Detroit.
Yep. Did you notice it actually used to be part of General Motors? And it got broken up in yes. It was part of General Motors. They did the financing for vehicles. When people would buy cars, they'd write loans against them. And then it got broken up in 2008, 2009 during the financial crisis.
Oh, so are we tossing? Are we keeping? Are we getting in now?
It. Can't bet against Detroit. 1, 2. I'm bullish on the banks in general. I think the banks are a hedge against the broader market. If central banks across the world take actions to increase interest rates, tighten up capital controls, it'll help banks. The market will get corrected with that. Banks will outperform there. I own several banks in my portfolio right now, which serve as that hedge. Rather than being short something, we're buying an inverse ETF. I'm taking the banks. I get paid a dividend for owning them. So I like Ally.
I'm gonna keep on it too. I want to see banks look to me overextended from a purely technical perspective. So I would wait to see, like right now, banks are at exactly the level of resistance where it's like make it or break it. So if XLF, the financial sector ETF continues up tomorrow and through the week, this is a really obvious keep.
Okay. Square.
Keep.
Get in now?
But not right now. I'm a keep for the long term, not right now.
Why wouldn't you?
The chart is a little bit ugly. It's not horrible, but it's not great. 2, you're exposed to crypto, right? I want to see a little bit of flattening out. Let's get some strength back into the crypto market. This stock for the past 6 months especially has moved with the price of Bitcoin. The charts line up. So I like the core business. I don't like that you're tied to crypto right now. I think that if you want to be into crypto, just go buy crypto. Don't buy an ancillary stock that could have other risks to it, company specific risks. So I like it, just not right
now. Neal?
Yeah, Square is an investment for me for sure. That's a stock that I would hold for 5 years based on the amount of tentacles they have plugged in throughout the entire small business economy in every country that they're present in. So they're doing a lot, and then I think the crypto exposure, Luke, is probably due to is that the Cash App allowing people to trade Bitcoin. But like, just look at the management of the company and the product direction. The foresight that they had with a simple PvP payment solution to add the ability to buy Bitcoin, to buy stocks. Yep, it's like absolutely, it's a great company. And then the chart, it's been Chop City right now. It's trading completely sideways. I would not get in to Square until it gets up to like 250, 260.
Okay.
Okay. So since we're on the Bitcoin topic, does that mean yes or no to Coinbase?
Yes.
I'm in it too.
Yeah. Oh, Luke, I thought you just said buy Bitcoin if you buy crypto if you want crypto, and don't take company risk.
So here's the thing with Coinbase that makes it a little bit unique. So it is exposed to the price of Bitcoin, obviously, but the stock is amazingly cheap. So I'll cite some numbers here. The price to sales ratio of the company, or let's use EV to EBITDA. So this is basically how much profit the company makes versus how expensive the stock is. The EV to EBITDA for this stock right now is about 14 times. And okay, that number, it's a meaningless number, but let's compare it to the S&P 500, which these are the largest 500 stocks in the US stock exchanges. The average is 25, right? So you're buying a stock like Coinbase that's trading at half, it's valued at half of what, these already super developed, slow growing companies are valued at. That's where I own Coinbase, not for the crypto exposure. That's not why I own the stock. Again, I think if you want crypto exposure, buy crypto. I own the stock because I think it's a true value play at this price that it's at.
Okay. Neal, were you going to say something? Or do you
Yeah,
agree?
similarly, I think it's found its bottom from its IPO. So I think there's going to be a period of some sideways consolidation, and then we're going to be targeting that high that we had the day that it IPO'd. So
Okay.
lots of money still to be made there.
Spotify. Do we like Spotify?
Toss.
Dang it! Why are we matching up on all of these?
We didn't agree on Discovery or one of them.
You didn't agree on Estee Lauder.
Oh, Estee Lauder. Okay.
Yep.
Wait, you would both talk. Why?
Get it out of here. Because it doesn't have a competitive moat. Why has Netflix been super successful? Because they made their own premium content. That's why you had to get a subscription. Spotify only has brand power and convenience because it's already what a lot of people use. There's no reason that someone that can't come out that has a more compelling offer for consumers. And it's really easy to undercut them on price as well.
Totally agreed. The other thing that I'll add too is that revenue isn't growing like crazy. From 2019 to 2020, the revenue increased from 6.8 billion to 7.8 billion. Obviously, is that a strong increase, right? About 20%. Yeah, that's great. But the stock market treats the stock like it's a company that's going to be doubling revenue every couple of years, and that's why I don't love this one.
Interesting. Okay, Lemonade.
Toss it.
Toss. Why? I love Lemonade.
Why
huge market. Huge market. They have a very small percentage of it. Are things going to get more or less digital as the world goes? It's going to get more digital. I love Lemonade.
Guys, Lemonade is the insurance company. If anyone is, that's what they do, right? Insurance. Yeah, exactly. They do insurance for
property
everything.
and casualty insurance.
And they have so many types of insurance still to expand into. I mean, they're probably in like 5 of 100 different verticals that they could be in. Like they just launched pet insurance. We did some content on our site. It went viral. People loved it. I like Lemonade.
I think there's no reason to download an app on your phone to buy insurance when you can type best insurance for XYZ on Google. Lemonade is Google, but they packaged it in an app that you have to download and then give all your information to. But I don't find it compelling.
But that's like saying that Spotify doesn't add value when you can go on YouTube and type in listen to Drake's best hits.
It doesn't. Spotify sucks.
But
it's the same thing. Lemonade is the Spotify of insurance.
Has a place to live on a phone.
No, but music apps have like
but you use it. You stay in the app. How many times are you opening an app to check on or purchase insurance?
Depends if you're committing insurance fraud.
Also, they offer the insurance, right? Like it's like a full service insurance company. So it's like a one-stop shop for insurance. That sounds valuable.
Every insurance company that exists is a one-stop shop for insurance. All they have to do is make an app.
Yeah, it makes it really easy, right? It's sort of like the Quicken Loans Rocket Mortgage. Why do they have market share? Just because it's really easy. I got a mortgage from them. I did it all on my phone while I was watching television. I did one with somebody else. I had to call the woman and talk to her 4 times.
But it was a website that you could go to, whereas like Lemonade doesn't offer it like that, and its coverage is terrible.
Okay, so Luke, would you get it now into Lemonade?
For a long-term hold, yes. In terms of a swing trade, I'd want to see the stock get above 100. We can see, I'm looking at where the price has gotten to on a daily aggregation. It's gotten stopped up at 100 several times. So that's the price I want to see it get above.
Yeah, so this thing's gonna tank into the center of the earth. So
Neal.
there's this thing. Or if you're familiar, there's this thing called a golden cross, which means that the 50-day moving average has crossed above the 200-day moving average, and that's usually an excellent time to buy any asset, because that means that it's consolidated sideways for a long enough time and it's starting to curve upward. And it's investors, institutions, everyone watches for it, and it's when volume picks up and buyers come in. It's when if something's about to go parabolic, that occurs. By parabolic, I mean the price is about to go straight up. There's the opposite of a golden cross is called a death cross.
Well, that's not a nice name.
That is not a nice name. That's what Lemonade had on May 19th, a death cross where the 50-day crossed below the 200-day, telling investors and traders, both retail and institutional, to get out.
But that 50 days got to be darn close to that 200-day again after these past few weeks in the stock.
Yeah. And plus, the stock is also very young, but I don't know, I just think that makes me more right if I say death cross, because it's scary.
Yeah, it is scary.
Okay, last one, guys. AT&T. We had a lot of, we spent a lot of COVID talking about 5G.
Toss it.
Yeah, boring. Too boring.
It's been trading within the same range for the past forever, like since before I was born. It's just been trading sideways. It goes up and it goes down, but it doesn't consistently grow up.
So I'm looking at the past 10 years. The past 10 years, the lowest the stock has ever been is 26. The highest is 44. It's at 30 right now.
The stock sucks.
Oh, wow.
There's no reason to own AT&T.
Other than a dividend. You get a great dividend, 7% dividend.
Yeah.
I think that's actually a little bit of a reason to own it. But
yeah, but I want to talk about dividends. There are some really good REITs and some really good like I have this ETF that's like it's all covered calls on tech companies that pays great dividends. So there are better options out there for that.
Do you remember which one it's called? That sounds exciting.
Yeah, I'll get it right now. Let me look at my portfolio.
Okay, so the second game quickly is if you had to hold one stock, so if you had to buy it start of the market tomorrow and sell it by close of the market tomorrow, so one day, what would it be? One answer only. Someone cheated last time and said S&P 500 for one of these. Don't do that.
That was definitely Luke.
Yeah, don't do that for any of these.
Oxy, OXY is the answer.
One day, AMC.
What?
Okay. wait. Does the day have to be today? Or like any day? Like what's
24 hours, Neal? You have 24 hours.
Like from this moment? No, it has to be this moment. You're gonna press buy in 1 minute.
You want to do AMC, baby? Yeah, he wants to do
Let
AMC.
it go.
All right, so this is Luke's crazy side. I'm a little more. I don't know. I would have to look at the chart. So like if I'm buying a stock for the day, I'm looking at I use 10-minute charts for that.
Just one, Neal. One stock.
OXY is breaking out. Yeah, that's an oil stock, Occidental Petroleum, super strong.
Yeah, I know.
What?
I know the one. I'm shocked. That's interesting.
It's believe me, it's good. Yeah, it's a consistent momentum leader in this regime that we're in right now, which is bearish tech, bullish energy.
Fair enough. And oil scares me, so that's probably why. Okay. 1 week.
AHT. Yeah, do you know that one, Luke?
Yeah, Ashford Hospitality Trust. It's up big today. NIO for mine. NIO. Tesla, China.
The electric car company.
Yes.
Why would you? Why AHT? Why NIO?
NIO's good right now.
NIO gapped. It broke out. It's continued the trend for a couple of days, and there's good news on it. The company put out their May deliveries. The market liked it. I don't see that there's any reason why that momentum should fade over the next couple of days.
Yeah, it has resistance ahead, so I would watch out for that. I like AHT because it has sold off as low as this thing is going to sell off. It absolutely found its bottom, and it has formed a rounding bottom, which means that full downtrend hit its bottom, and now there's nothing but buyers left. It's formed a golden cross, and it's already on a rip right now. It formed that golden cross like 5 trading sessions ago. AHT is about to rip. Like I'm talking about like 50 to 200% gains on this thing. Listen, this is educational and entertainment purposes only. But this is a stock that I'm going to very, very aggressively trade. I'm going to keep my stop losses tight, but I think huge earning potential on AHT.
Okay, I'm just to quickly recap, guys. So Neil and Luke are telling us what stocks, if they were going to buy stocks tomorrow and they're going to hold for periods of time, they're telling us what they would buy. So it's not investment advice. They're just telling us what they would buy and what they think is really good, what they would own. And so far, we've heard for one day, Luke said he'd buy AMC. And Neil said he'd buy OXY, that's Occidental Petroleum. And for 1 week, we have AHT from Neal, and we have NEO from Luke, that's NIO. So for a month,
SXC, Suncoke.
SXC.
You're not going to like this one, Yama. This is coking coal. So it's dirty energy, but it's necessary in the process of making steel. So steel.
Why do we?
Because steel is a very strong sector right now. When you talk about XME, that's not precious metals. That's steel and copper. So that stuff that's necessary for automobiles, bridges, any type of thing, anything that uses steel. Is on a rip. Big companies there, CLF, X, United States Steel Corp. The thing behind that, though, that makes all of that steel possible is coking coal. SXC, Golden Cross, ripping.
Okay. And Luke?
All right, you might not like this one either. Tiger Brokers, ticker TIGR. Neil, look at the chart of that one. This is it's a brokerage out of China. It's similar to it's like the bamboo of China, Hong Kong. That's why I said you might not like it. Maybe it's a competitor.
Fingers crossed.
But check this out. They put out earnings about a week ago. They reported $80 million of revenue versus $20 million of revenue for the same quarter in the previous year. We have the Robinhood IPO is going to be coming up. That's another catalyst for the stock into the upcoming month. And we're just generally seeing more strength back into Chinese stocks in general. So they have the strong revenue growth that sort of kicked off the run. We're seeing money starting to flow back into the Chinese stocks. Plus, we have that Robinhood IPO on the horizon. It's a stock that's sort of wild and moves around a lot. But if it gets some energy behind it, I mean, we could get back up towards those highs in the mid 30s.
Yeah, Tiger will hit $31 or $32 very soon.
Okay, so that's for a month. Was that for a month or for a year? That was for a month, right?
A month.
That's a great one. So
I like
Neil
Tiger.
told me not to. All right, whatever. I called that one out a week ago. Neil's like, I don't like it into earnings.
I just said don't trade into earnings is all I said. Oh, okay. I'm sorry. I can't predict earnings when they come out.
A year.
X United States Steel.
X United States Steel.
Yeah.
A decent one.
Do you think you see a lot of building post COVID?
New infrastructure plan for the United States.
Yeah, that's a good one. Luke?
All right, I'm going to go boring on this one. I already talked about it. Ticker GLD Gold. It's an ETF, not an individual stock. I like precious metals. I really like it as this is my anti-inflation play. So GLD, it's the ETF that tracks the price of gold.
Okay, and I don't know. Do you think of 5 years and 10 years as the same?
Yeah, I do.
Yeah, exactly. So 5 to 10 year range.
Amazon. Google.
Ooh. Okay.
Google so embedded into everything, into homes, into schools, into businesses. They're starting. This is a little bit of an anti-Amazon. They're starting to steal market share from Amazon Web Services. That's hosting for software development. At Google, 5-10 years, I throw it in there. I won't even look at it, and I'd be comfortable.
Yeah, I can't name a single successful product launch from that company in the past 5 years, besides their search engine, which came out ages ago. But Amazon, what? Amazon, yeah, their web services is the biggest thing.
Look, we're on Zoom. We should be on Meet, but we're all on Zoom.
Yeah. Why aren't we on Meets, Luke? Because it was a failed product launch. So Amazon is the best company on the planet. It is the best company on the planet. How does the economy work? People buy things, people sell things. Amazon facilitates all of that, and it permeates everywhere. Also, they're in constant startup mode. They're always launching new verticals, and they succeed.
It's always day one.
It's always day one. Exactly. Jeff Bezos' ethos has catapulted that stock up to what, like 3,000 something.
All right, but now I want to ask about one. What about ticker JMIA? This is for Yamo.
Jumia.
People
really like that.
Why'd you laugh like
That's
that?
all I get. Okay. So let me make the question more pointed. Is it a real Amazon challenger?
No.
No, not at all.
No. Wait, are you saying you wouldn't buy Amazon because you think Jumia might be?
No,
like
that's not what I'm saying. I'm saying,
okay, yeah.
Is it a real Amazon challenger? And less about what I sell Amazon, but more what I buy that stock.
Well, Jumia's stock does a lot of crazy things.
Yeah,
I mean, it's great for trading. I don't know if I'd hold Jumia for like super long. I mean, I would hold Amazon forever. I would like.
Okay.
I think Amazon is the best company in the whole entire world. So I'm very biased here. I think it's
a good choice.
The best company. It might be the best company ever, actually.
I think so. You're absolutely correct.
But Jumia has really good. If you're a trader, Jumia is good. I'm not much of a trader, so I kind of buy my stock.
Yeah, the stock goes from like 10 to 70 to 40 to 6. I mean, it's crazy.
Yeah, so if you're a trader, it's fantastic, but I'm not. Just quickly. So generally, guys, just as a general thing for everyone here, first of all, thanks so much for doing this. Thank you. Guys, we're going to find a way to have Luke and Neal around more. We're going to think of something. Luke and Neal, if you think of anything, let me know. Just as final piece of advice for people who are just coming, if today is the first time I've ever heard of the stock market and I want to start buying stocks, what would you tell me to do? So today's my first day ever.
Read a book. Get a book.
Strongly disagree. I think you just had to jump into it, or you're never actually going to become emotionally engaged, and that's the hardest part, and actually start tracking it. I think buy something. I think buy one of these safer stocks like an Amazon or a Google, and then challenge yourself to really understand, why is the stock up, why is the stock down. When you can figure that out for one stock, then I think you're ready to make the leap and start picking other stocks.
Yeah, I changed mine. That's what I agree with Luke.
Yeah. So one of those, or I mean, even the S&P 500, generally.
Even the S&P 500.
Yeah. Are there any beginner books you'd recommend, Neal? Because I know you did say read the book.
Yeah, I like technical analysis of financial markets.
That sounds like a textbook.
It is a textbook, but it's very helpful.
Wow. Okay, well, guys, so that sounds great. Guys, what are the tools Benzinga has? I mean, I know we have Benzinga Pro, and it's, Benzinga Pro is there, it's great. Are there any other tools, from Benzinga that, because we do have some more experienced investors and traders in our, listening. Any other tools you'd recommend?
Benzinga Pro is a good one. The other one that I'll say, again, in your Bamboo app, what I just talked about, understand what's causing your stocks to go up and down. There's a little sentence there on a lot of these stocks that are moving that's going to say this stock is up for this reason, it's down for this reason. Study those. It's going to make you a smarter investor. It's going to give you more confidence that that's what it's made for. So definitely make sure to check that content out.
Okay, fantastic. That is exactly all the time that we have. Yes, guys, there will be a recording of this sent after. If Benzinga, someone said, I mean, there'll be a recording of this sent after. If you have other questions, you can email them and we'll try and get back to you. And like I said, don't forget everyone, if you trade for the week of the Bamboo Bootcamp, so if you trade between now and Friday, 3 people are going to win cash prizes. Going to win cash prizes. Someone is going to win $2,000. That's ₦1,000,000 naira. Someone is going to win $1,500, and someone else is going to win $500. So good luck, happy investing.
Neal, good luck. I hope you win.
Happy investing. And of course, guys, don't forget, we have the Bamboo Stock Market course as well on YouTube. So you can find that very easily. Just do a quick search for the Bamboo Stock Market course, and we will also share the link after. And yeah, okay, perfect. The link is in the chat, and I see Luke and Neal have shared their Twitter, so you can read more. Do you guys tweet about stocks?
Absolutely.
I don't have Twitter.
We
So
tweet about stocks, and we take pictures of ourselves after we work out. So
Yep.
follow us on Twitter for all of the content that you need to get your day started.
Exactly.
Fantastic. Thanks so much, guys. Thank you very much. Thanks for coming. Bye, everyone.
So much fun. See you guys. Thank you.
All right, bye, guys.
Bye. Ugo.